What a crazy week it's been in the stock market. If you've been paying any attention at all to your portfolios, which I'm sure some of you have, you're probably not feeling too great, depending on what stocks you hold. There are a few outliers in the stock market right now, but a lot of stocks that we talk about that you guys probably love are feeling some pain right now. But remember, it was just a few weeks ago when we were talking about a lack of opportunity in the market. We had the Dow, the S&P, the NASDAQ all at all-time highs. We have peak euphoria happening, and that can't last forever. And I was talking about that. I sold some Tesla during that time when it hit up over $1,200. And now it's around $1,000. That ended up being a good idea. Peak euphoria doesn't last forever, and we're feeling the ramifications of that right now. But I think there are a lot of opportunities in the market right now, and that's what I want to talk about in this video, so stick around. Hey guys, welcome back to the TipRanks YouTube channel. I'm Richard Allen. Thank you so much for joining me for another video. We're going to talk about some opportunities in the stock market right now, and I know if your portfolios are completely red right now and it seems and it feels like you're losing money, maybe you are, and that stinks, and I'm sorry. But peak euphoria, major indices being at all-time highs constantly, it just can't happen. It can't occur forever. We were just talking about it a few weeks ago where there wasn't really any opportunities in the market. Now, there are a ton. And I want to talk about a few of those opportunities in this video that have tremendous ability to do really, really well, potentially in the short term, but definitely I think in the long term. So we're going to peek at a few different stocks in this video. I hope you guys enjoy it. Please let me know by the end of this video which one of these stocks that we talk about is your favorite. I would love to hear your opinion, but let's just jump right in. All right, guys, first stock we're going to talk about is a familiar one. I've made 2 videos on them this week. I really love this company. It's Square, soon to be Block. They aren't changing their ticker symbol. It's still going to be SQ, but I wanted to bring this up because it did drop down to 180 today. It's 181.31 as of recording this video. So now down almost 15% over the past 1 year time frame, hitting a low of 174 a little bit earlier today. Crazy day for Square. And really the market in general, they were down another 5.6%. I really think this is a fantastic entry point for Square. Again, I want to reiterate this. Right now, investing in the stock market in the short term is risky because in December, there are still some negative catalysts to come up. There could still be a lot of selling pressure, but things could turn around really quickly. But we aren't quite at great support levels right now for the S&P specifically. So I think there is a little more pain ahead next week before these markets turn around. But any one of these individual stocks could do well or poorly in the short term. Just keep that in mind. It's risky right now to enter any positions, really not having any idea where the stock market is going to go in the short term. Second company I want to talk about is very similar to Square. It's PayPal. PayPal, ticker symbol PYPL, is now down 15.5% over the past year. We looked at Square the other day. There is quite a bit of upside based on what the analysts have to say in Square, about 60%. And now the analysts for PayPal, similar story. Strong buy based on 31 analyst ratings with an average upside of 50% for PayPal. A third company I want to talk about is Etsy. Etsy has some good upside as well. They were down 7.5% overall today. This is a company that is doing extremely well on the growth side, and there are some crazy price targets, big range here, but almost 20% upside over the next 12 months for Etsy. Another company I want to talk about that I was doing some research on today because they hit a 52-week low today, trading under $3 per share, is SmileDirectClub, ticker symbol SDC, down almost 10% today. But this does have a hold rating, so be careful. There's 1 buy, 6 holds, and 3 sells. But the price target on this right now has 110% upside almost, and that's only getting the stock to right around $5 $2.67. Oh my gosh. So SmileDirectClub is a company that has a lot of growth potential over the next several years, but they are losing money right now, and those stocks aren't doing well in this environment in the stock market right now. Another company, another growth stock that I want to talk about that is now below where they were trading. If you've purchased Beyond Meat at any time, you're down. If you're holding on to Beyond Meat, absolutely crazy. I've seen this stock as high as, it's been in the couple $100 range, right? If we look at the 52-week range, $221. It hit an all-time low today, down 52.82% over the past year. But what do the analysts have to say about Beyond Meat? They like Beyond Meat. It's a moderate sell, though, 23% upside over the next 12 months. Another company that's losing money, unfortunately, in this environment, not doing super well. A company that I want to talk about that got hit really hard today. They had a little bit of an earnings miss. They were down 4.5% and 2.5% respectively with revenue and EPS. But they fell. Look at that. 42% down on the day. What? So this environment is crazy right now. So it's the opposite of peak euphoria. It's like mass panic right now in the stock market. So for a company like DocuSign, with now a $26 billion market cap, earlier a $40 billion market cap, to fall 42% in one day because of a 4% miss is crazy, right? So this could be a potential buying opportunity for DocuSign, ticker symbol DOCU. But what do the analysts think about DocuSign? Now there's a 58% upside on DocuSign after falling crazy today. So guys, again, keep these things in mind. This is a crazy environment right now. There are some potential risky stocks in here. The next one I'm going to talk about is a very risky stock. It has fallen a ton recently, and people keep asking me about it because I made a video saying they were undervalued, and then they fell an additional 50% recently. It's Paysafe. I still believe in this company. I do want to talk about here the charts. I want to look at the charts here. This is a $2.4 billion market cap company now with $1.5 billion worth of revenue, yearly revenue. So the ratios here are pretty low from a revenue to market cap standpoint, sales to market cap standpoint, but now down 71% over the past year. This is a company that I just bought a ton of shares on, because I really think that this is going to turn around. Long term, I am down, or short term, I am down on those shares because I purchased at around $4 per share. But I have all the faith in the world in this company in the long term that this will do well, and I'm willing to hang on to the shares that I purchased. So that's how I feel about Paysafe right now. I want to tell you guys how the analysts feel about Paysafe. It's a hold right now based on 1 buy, 4 holds, but a 51% upside. I would feel pretty good about that upside if that happened for the shares that I'm holding right now. Another company that I've talked about a bunch, this is the last company I'm going to talk about, is Opendoor. I think this is a very attractive price point right now. Again, a company that is a growth company, but is so close to being profitable. Ton of revenue. Opendoor is disrupting the real estate market right now, and I really think they're going to do some fantastic stuff out there. I purchased a bunch of this recently as well. Ticker symbol OPEN has a 126% upside over the next 12 months. So lots of opportunities out there. I know that your portfolios may be hurting. I wanted to bring you this type of video today to show you that there is some hope out there in a bunch of different industries. I really think that we're the opposite of where we were just a few weeks ago, where there was really just this peak euphoria in the market where it didn't seem like anybody could lose in the market. And that just can't last forever, guys. It can't. Now, in the grand scheme of things, the S&P is only down a few percentage points over the past week. It certainly could fall a lot more before this correction is over. But I keep saying it, as long as the monetary policy is where it's at, I really think this market is going to turn around. And when it does, I think it's going to happen really quickly. I really think this market is going to turn around. I could be wrong. And so that's the risk with investing in the stock market. You guys need to know these risks when you're investing. But if you're a long-term investor, the major indices tend to do very, very well over time. So 5-10 years from now, the S&P will probably be worth a lot more than it is right now. So that's my 2 cents going into the weekend. I hope you guys have a fantastic weekend. As always, if you found any value in this video at all, you learned something new maybe, let me know by hitting that like button and that subscribe button down below. And as always, I'll see you in the next one.